Next, in terms of how the securities are bought and sold, the financial market is divided into two categories of market: the primary market and the secondary market. The primary market is a market where new security issues are sold to initial buyers through auctions. Any corporate organization, if it wants to issue its share or bond for the first time, it needs to do so through initial public offering or IPOs. These initial public offerings are issued in primary market. At first, investment banking is a financial institution that assists corporations and government agencies in so doing. What investment banking does is they try to raise financial capital by underwriting or acting as their client's agent in the issuance of securities. They are known as primary dealers and brokers. So the primary dealers, they take part in those auctions where initial public offerings are issued for the first time, and they, on behalf of their clients, they bid up the price of bonds and stocks. After the prices are bid in the auction, then the shares and the bonds are transmitted to secondary market. In Bangladesh, investment banking is also well known as merchant banking, where most of all the banks provide this service. Now, the functioning of primary market is very important because it enables each and every new organization to have its own share issued and bought by the general public. As opposed to primary market, secondary market is a market where securities which are previously issued are bought and sold. Where in the primary market, the IPOs are issued for the first time. On the other hand, in the secondary market, the IPOs which were previously issued in the primary market are then reissued or bought and sold by a general public in the secondary market. So that is why the secondary market is better known to the public as compared to the primary market, because unlike primary market, in the secondary market they can directly take participation in the market and they can engage in buying and selling their stocks and shares as they want. New York Stock Exchange, Nasdaq, Dhaka Stock Exchange, etc. are some of the examples of secondary market. Secondary market is very crucial for the overall financial market. Major functions of secondary markets include making financial instruments more liquid. Since in the secondary market, the general people come and engage in buying and selling of securities and shares, it is a more liquid market as compared to the primary market. So investors who have shortage of fund can resell their product in the secondary market, as well as those people who are willing to buy shares of the previous existing organizations, they can also take participation and buy shares from the secondary market. Also, secondary market determines the price of a security in the primary market. So the demand of a security that prevails in the secondary market, it directs the price of the same security in the primary market. For example, if a particular share has high demand, then in the primary market, while issuing IPOs, that organization's share will also get higher bidding by the dealers and the brokers. So the secondary market serves few major functions of financial market. The financial market, including secondary market, can be organized in two different ways. The first one is the exchange market and the second one is over-the-counter market. In the secondary market, trades are conducted in a central location, so buyers and the sellers who are willing to buy and sell securities, they meet at a central location and engage in trading. And the exchange market is always a physical market where both the buyers and the sellers can physically go and buy back securities and shares. On the other hand, over-the-counter market is a market where dealers at different locations can buy and sell securities. This is where the financial market goes international. And over-the-counter market allows foreign investors to invest in other countries' share market and buy other foreign shares and bonds. Unlike the exchange market, in the over-the-counter market, the buyers and the sellers not necessarily meet at a central location. Rather, they can do the trading through their dealer at different locations and buy and sell their desired securities.